In today's interest rate markets, I want to focus on the 10-year note. Again, today we got end of the week scenario going here where we're seeing the 10-year note continuing to be bid up as we move to the end of the week. We're seeing the 10-year note right around the 131.28 half level. So that's the high end of the range. And really, when you look back now over the course of the last month or so, if you look at those early September highs, we're pushing those early September highs after that sell-off in it troughed on September 13th. We are now seeing a firm bid entering back into the market. We're seeing all the durations being bid up once again. And now, as I mentioned, we're just off of those September highs coming in around the 132.09 level. So again, it's very interesting to see the volatility persist in the bond market. We're seeing it play out in the equity markets as well. So it is, to some degree, you're seeing that volatility bleeding into other asset classes right now as the market's still trying to figure out really what's taking place with not only central banks globally, our Fed, as well as the trade situation, which will maybe get a little more clarity on next week when the U.S. and China meet here in the United States. Looking at the yields, 10-year yield down at the lower end of the range now, still not taking out what we saw in early September, but 1.51 on that 10-year note. So again, that's the low end of the range for the last couple of weeks. And that 2-year, 10-year yield spread that a lot of people like to pay attention to from a recession indicator, that's actually maintaining a nice firm spread right now, about 12 basis points. Now, we did see the 2-year yesterday hit new yield lows for yield, new highs for the 2-year, new lows for yield. We saw it go down to the 1.378 level. That's a 2-year low for the 2-year note. Popping up a little bit today. We did see some selling pressure in the 2-year. So the shorter end of the curve came under a little selling pressure. The back end of the curve was bid up. So right around 1.39 on that 2-year, where you got the 10-year right around the 1.51 level. Looking at the Fed and some of the data points as we move into next week, we did have Fed Chairman Powell speaking today, indicating that they were hoping to find ways to reach that inflation target of 2%. The market's still not there yet. We did get a number this morning. Wage inflation from the unemployment report was lower year over year. So again, the Fed is still trying to look for ways to stimulate the market. And I think that was very clear in Chairman Powell's speech today. Also, CME FedWatch tool now pricing in a 78% chance of a cut at the end of the month. So that's a big shift this week. We've seen that change dramatically. The percentage changed dramatically there. Now a very high probability of another cut coming at the end of October.